close in history, but it's second highest. Lou Basenese is the founder and the chief analyst of Disruptive Tech Research. Good to see you.
Good to be here.
All right, so the dot-com 2.0 bust everyone is talking about, is it coming?
Newsflash, no, it's not. The techpocalypse is not directly ahead. And I'd say for two reasons. Technology is too pervasive and increasingly so. About 30% of the S&P 500 is weighted towards technology. I'd argue every company is a technology company. They either sell vital technology products and services or rely on them too heavily to exist without them. And the other thing is the fundamentals in technology are too strong. If you look in, quarter out, the largest tech companies keep putting up the best sales and earnings growth. Until that stops, I don't expect the rally to, and I'd bet on that.
What could stop the rally is what might happen tomorrow. The Fed wrapping up their two-day meeting, not expected to raise interest rates now, but they are expected to announce the wind down of our massive, their portfolio that they've built up since the financial crisis. This has been viewed as basically the final exam for the Fed in how they handled the financial crisis. Will that wind down affect tech stocks?
I think the Fed's a nuisance rather than a real threat to tech stocks. I really don't think it's going to undermine the long-term trends that are making technology a bigger part of our everyday life. So, yeah, in the short term could cause some volatility, but not in the long term.
So, Lou, you're saying North Korea, hurricanes, the Fed, nothing can take down technology?
Not right now. I think it's going to continue undeterred. I mean, we look at history as a recent example. None of that, hurricanes, the North Korean threat, none of that has threatened technology whatsoever. And as long as the fundamentals continue, I think we're good.
What about at Alphabet and Microsoft? They lost ground yesterday after Amazon said it plans to charge businesses by the second for their cloud servers and storage. That affected the market a little bit.
Yeah, it did, but I think we shouldn't be surprised. An apple tree grew an apple, and by that I mean Amazon slashed prices to gain market share. It's totally predictable and totally characteristic of Amazon. And I think Amazon, here's what's key. They recognize if you control the cloud, you can control the economy and by extension your own destiny. And this is a direct response to the lagging growth that Amazon had in the last quarter. It was about 43% for Amazon Web Services versus Microsoft's 90%. So this is a direct opportunity and direct way to increase market share and reignite growth, and we shouldn't be surprised when it works out to their benefit.
We're just showing a chart of Apple. Apple is another popular name. We're seeing reports from KGI specifically this morning that demand for the iPhone 8 is pretty tepid, very short shipping times compared to other phones in years past. Is that because everybody's waiting on the 10?
I would say yes, and I think there's going to be too many Apple fanboys obsessing about the 10 versus the 8 and who's switching and cannibalizing what. I think we should watch the Apple Watch. That's going to be the big surprise, big seller. You're already seeing shipping times extended out, much more demand than anticipated. The key was that Apple untethered the watch from the iPhone, and that's really going to set off sales, more so than anyone's expected in their models.
And they also announced an update to their streaming device. Speaking of streaming, this is where the money is. Roku, they hope to raise more than $250 million in an IPO later this month. How do you think this company's never made a profit? Are you bullish on Roku as a public stock?
I am not bullish, and maybe Cheryl can weigh in here. We talked about Snapchat and this big onerous voting control that management keeps. Same thing with Roku. They're going to control roughly 90% of the voting power after this goes public. This is a terrible precedent that's being set in the technology sector. I think this is obvious defense because they know they're not profitable. They can't sustain the growth without profits, without having shareholders just riot. And so they're trying to defend against that in advance. So I am not bullish going into this IPO, just like I wasn't with Snap.
Lou, thanks for the shout out. It's Cheryl here. I really appreciate that. I mean, I covered that Snapchat out, and we were all saying this is not a good IPO. So appreciate it.
Yep, I agree. Amen.
Good to see you, Lou. Thank you.
Good to be here.
I love when I'm right. It doesn't happen much.